All right, the European debt crisis hasn't scared away billionaire investor Wilbur Ross. Ross took a stake in Bank of Ireland last July, and his partnership with fellow billionaire Richard Branson has brought him to the UK. Wilbur has a 45% stake in Branson's Virgin Money, which acquired the, quote, good bank assets of failed Northern Rock. And he joins us right now from the floor of the New York Stock Exchange to discuss how they're going to break into the British banking system. A pleasure to have you on the program, Wilbur. Great to see you.
Nice to be on, Trish. Thank you.
So, as I was just telling you a little bit during the commercial break, I recently was with Richard Branson. He was telling me a little bit about this venture that the two of you have embarked on. I mean, it's amazing. You're out there buying a British bank at a time when a lot of investors are pretty, scared about Europe right now. What has you convinced that this is a good investment opportunity at this point in time?
Well, a couple of things. First of all, as to Europe, we think that with the European Central Bank now finally acting like the Federal Reserve Board as a lender of last resort, plus the fiscal controls they're putting in, we think that Europe is in far better shape to withstand any kind of crisis than it would have been 6 or 12 months ago. In terms of UK, we think what the Cameron government is doing is on track. They're being fiscally responsible. They're going to get their debt burden down. And while it's a little bit of a slow period now, we think UK will come out of this pretty well.
What about Bank of Ireland? Because you've also taken a stake there.
All right, well, we really think that Ireland is the poster boy for reconstruction in Europe. They moved very decisively when the crisis hit, cut out 13% of the cost of civil service in one day, suspended federal capex, cut social services despite a 14.5% unemployment rate. And we therefore think they'll really get things going properly. More recently, they refinanced already several $billions of debt that isn't even due until 2014.
Wilbur, do you think there's a big distinction here that investors need to be aware of between, say, the UK and Ireland and Spain and Portugal and Italy?
Yes, I do. Particularly a big contrast with Greece. The Club Med countries, which is what I call those that you cited, are fundamentally dysfunctional economies. They have terrible labor laws. People retire very, very early. They just aren't set up right to be a modern economy. Ireland is a very modern economy and very high-tech based. It may surprise you to learn that Ireland is the world's largest net exporter of pharmaceuticals. It may also surprise you to learn that American corporations have invested $160 billion in Ireland, more than they have in Brazil, Russia, India, and China combined.
Yeah, pretty amazing. When you look at the European economy as a whole, and you compare it, Wilbur, to our economy back here in the USA, which do you think is best positioned in the next 12 to 24 months to really be on the most stable ground?
Well, I think the U.S. economy is clearly stronger than the European one. But you really can't talk about Europe as one monolith. No one has ever introduced himself to me as a European. And so you really have to look at Germany separately from Italy, and Italy separately from Spain and Portugal and Greece. But in aggregate, Europe's in for a little rougher time.
Doesn't it make it tough, though, then, as an investor? I mean, if you're investing, say, in the euro, I mean, you've got to sort of accept the fact that you're getting, the good with the bad.
Well, we hedge things back to the dollar, so we're not particularly worried about the FX risk in the situation.
What do you think of the U.S. Treasury market right now?
I think a year or two from now, we'll look back and say the last big bubble was U.S. Treasuries, the 10-year Treasury. I think that it's impossible for that paper to hold its current price level. Inflation is not gone forever and for all time, and monetary easing can't get progressive forever and for all time. So to me, the only question is when, not whether they go down.
Do you hold the Fed or blame the Fed at all for this potential bubble that's about to burst in Treasuries?
Well, no, I think the Fed did what it felt it needed to do in order to stimulate the economy. But you just can't keep priming the pump day in and day out. And remember, this country is hemorrhaging money. Every year they have to borrow more and more money. The Fed, in effect, has been funding the deficit by the amount of money that they've put in, ballooning their own balance sheet. Once they stop doing that, there'll be a change in interest rates.
You know, let me just ask you about the equities market here in the U.S. We've had a great run as we close out this first quarter. Are we in store for more good things for U.S. stocks?
Well, I think U.S. stocks, certainly relative to European stocks, are pretty cheap. I also think that Chinese stocks and Japanese stocks are pretty cheap. So those would be other places where I would look.
And yet you are putting your money in Europe.
Well, but we're putting our money in whole companies. You were talking about the market as a market. A company and a market are not altogether linked together.
Do you think that we could continue to see more upside if the U.S. economy continues improving here in U.S. markets?
Yes, what I'm worried about is as we get toward the end of the year, if Congress gets into its usual befuddled state, there'll be a lot of uncertainty building up because there are an awful lot of things about to expire the end of this coming year, the year 2012. And if Congress doesn't take some action till the very last minute, you'll probably have some volatility later in the year. And then also, depending on how the election goes, you could have some volatility. I think the market would prefer a Romney election, and I'm a Romney supporter, rather than an Obama election.
Yeah, it's a very good point. And finally, before I let you go, tell us why you're at the NYSE today.
Well, we're here because we're the main sponsor of TEDx Wall Street. This is the first time TEDx has come to Wall Street. It's been very, very well received. They turned away many, many applicants because their idea is to only let people come into this audience of maybe 500 who really can add something to the dialogue. And the first 4 sessions so far have been really quite stimulating and quite interesting points of view.
Well, we are looking forward to seeing you ring that closing bell, Wilbur. We know you're going to be doing that as well.
As many times as I've done it, it's always a thrill.
Well, hey, at least it's up today. Thanks so much, billionaire investor Wilbur Ross. We hope to see you back on the program.